Welcome back. As promised, we have the management of Ather Industries. But before that, just a quick word on the market. It is losing a bit of steam on the headline index, so it's flatlining now for the headline index. But in the broader markets, there are plenty of stocks that are moving around. You have something like an Edelweiss that has come back into action, 8% higher on Edelweiss Financial. Masgao Dock continues to charge ahead. It's now up 226% this year. It's been one of those phenomenal multi-bagger sort of stocks. Masgao Dock up another 5% right now. And Ujjivan Small Finance is up almost about 4.5%. But specialty chemicals major Ather Industries signed a long-term master supply agreement with Europe-based Polaroid, known for its instant photography products. So this MSA includes cooperation in the areas of R&D, manufacturing for Polaroid films and Polaroid sciences. Aman Desai, who's the founder and director at Ather Industries, joins us now to talk about that. Aman, if you can just start by telling us what is the exact service that you will provide to both Polaroid film and sciences, and can you explain the contours of this agreement? What is the kind of monetary involvement here?
Yeah, hi Sonia, good morning. Pleasure to be here again. We had a good day yesterday. We signed the long-term master service agreement with Polaroid, which is the holding company for the group of companies, including Polaroid Film and Polaroid Sciences. And so here we actually have a long-term relationship already with Polaroid, and we had a supply agreement a few years ago as well, and this kind of builds upon that and adds on to that. And so what we do is we do research, development, scale up, and ultimately supply of their required commercial quantities of materials and innovative chemistries and products that go into the Polaroid film business, which is the instant photography business. And as we go towards more effective, enhanced instant photography products. And then also their upcoming new division, which is Polaroid Sciences, which is innovative chemistry and technology in the areas of human health sciences and so sustainability, so medical use and therapeutics, as well as climate change and sustainability. So,
Aman, could you put some numbers to it? Could you put some numbers to it? You said you're already working with them. What is the total scope in terms of revenues to you from this customer, single customer? And if you can break that up, how much was, say, annual revenues from them? What does it go up to, and what's the total size of the business?
Yeah, Prashant, thanks for that. So I cannot disclose much information because it's confidential, but in terms of the value that will be generated, incremental value that will be generated from this master service agreement is amounting to USD $15 million, and so about 120 to 130 crore rupees over the next 3-year periods and then from the next fiscal year. And this does not include the revenues that will be generated from the cooperation and the research and supply agreement from the Polaroid Sciences, which is not yet determined fully, and this is something that we are working on along with them.
So this 120 to 130 crores that you said, this is the overall revenue that you're expecting, is it?
And that is in the CRAMS business and the CRAMS business model that we have. And this is so it is quite attractive because it's a very high EBITDA margin business model. And so that is the overall revenues from this partnership that we have.
And this is over the next 120, 130 over a few years?
Over the next 3 years. And this is the number we are comfortable with putting out in the MSA. And again, as I said, this does not include the numbers that will be generated from the Polaroid Sciences division.
Okay, so how much will you generate from the Polaroid Sciences division then?
It's a very exciting front for them. So we are doing innovative chemistry under patent molecules for a variety of different salient challenges of the Earth today. And so sustainability, climate change, therapeutics, medical use. And so it's a very exciting field that they are on. And we're very happy to be partnering with them towards the entire value chain of research, starting from the research, making the molecules towards the ultimate supply as they commercialize these technologies. And so it'll be very interesting to find out. We are eager to find out.
Sure. You also said this is a high margin deal and it's margin accretive for you. What does this mean for blended margins then, Aman? Because you're in the first half, you did almost 30%, back at almost 30% margins. Yeah. You could do much better than that, you think?
Yeah, Sonia, I think we can. Overall, the CRAMS business model is high margin, but it's about 13 to 15% of our overall revenues, which this MSA belongs to. Then we have the exclusive manufacturing and the large-scale manufacturing business models, which is approximately 28 to 30% margins for us. And so as the years go on, and as I've always been talking about this, as we sign more and more of these agreements, which we are actually working on numerous angles towards, we expect that these margins, overall cumulative margins of the company, will go up over the next 2 to 3 to 4 years, say, for example.
So are there any investments that you have to make from your end, or is it from the existing facility?
No, it's from the existing facility. And so if you remember, we have already expanded by triple in size the R&D infrastructure that we have, as well as the pilot plant infrastructure that we have over the last 1 year. And this will fit in perfectly into this expanded infrastructure that we already have and that is already operational. So there's no capex that has to be done towards this MSA. It's going to be done in the existing facilities.
And CRAMS, you've said earlier you'd want to sort of have about 30% of your revenues coming from that business, right?
So CRAMS, I would like to have 20%. So right now it is 13%. I would like to have 20% coming from CRAMS overall, and the remaining 40-40 equally divided between the large-scale manufacturing and the exclusive manufacturing. And the exclusive manufacturing is the product of molecules that go into commercial manufacturing from the CRAMS business model. And so overall, this will be bigger.
Okay. All right, Aman, thanks so much for stopping by and filling us in with all of those details. Look forward to having a chat with you rather soon. Well, the next company on our radar is Sheela Foam. Well, let's understand how things are shaping up. The numbers in Q2 were a little bit sluggish, but let's find out what's the growth trajectory from here on. We're joined by Mr. Rahul Gautam, the MD of the company. Hi, Mr. Gautam. Good morning. Well, earlier you all were guiding for around 12 to around 13% revenue growth in FY23. So do you stick to that? And also, what's the margin trajectory from here on? You're doing around 11% or thereabouts. What should we work with?
Thank you. Thank you. Thanks a lot for having me here. Yes, you're absolutely right. I mean, we are on track for that. The indications that you have is for Q2. And I would say that just because of so much of volatility and uncertainty, you have to probably look at Q1 and Q2 together. If you look at the top line is about 14-15% up, and EBIT levels would also be something between 10-10.5%. So we are on track for that. But in the same breath, I must say that, right now, what is considered as a high season, October, November, December have historically always been great for us. I still see a bit of patchiness on it, It's good for a few days and then this suddenly goes a little soft and then it's good again. So the steadiness or the certainty of the markets are not back as yet. And that's what we feel. It should stabilize maybe by December or by January.
Mr. Gautam, and this is the strongest part of the year for you, right? Traditionally, historically, seasonally speaking.
Absolutely. Absolutely. This quarter constitutes almost about 30% of the sales.
And you're saying that it's kind of patchy so far. It's coming and going.
That's right.
Demand. Why do you think that is? Why do you think that is? Is it underlying sort of consumer sentiment being a little low? Is it inflation, which has kind of accumulated to where prices are now over the last couple of years? What's your sense?
So I think it's all of that. And especially India being India, very diverse, very different to what's happening in South Zone and what's happening in the North Zone. I think it's a mix of all that. It's also a mix of coming out of COVID times and coming out of, let's say, supply chain issues. It's also coming out of or getting into inflationary part. Is the wedding season is there. However, it's also impacted by the high prices. So I guess it's a mix of all that, and it's just that we haven't achieved the stability that we should have or should be achieving. But I think that the curve or let's say the waves are kind of slowing down, and we are moving towards a stable condition, but not yet.
Okay. There is a bit of a churn in the organization as well. Your CFO recently resigned. You also changed your auditor. Anything that shareholders need to be concerned about?
No, nothing at all. As far as the auditors is concerned, it's just because the term of 5 years was over for them, and there had to be a new auditor, which SEBI says, and that's why that came in. Similarly goes for the internal auditors, that once we changed the auditors, we said the internal auditors have also been there for 6-7 years, and it's a good practice to change. As far as the CFO is concerned, the gentleman had come in from Mumbai. Family is there, youngish, 9-12-year-old kids, etc. I think during the COVID times, it worked well because you could be operating from a distance. But when it came down to coming out of it, and what he thought that the family could shift and also, but it didn't happen. It could
in
happen.
place? Have you put Mr. Gautam, have you put a new CFO in place?
No, we have begun our search because it will take a little bit of time.
Okay.
But
All right.
But the system is robust enough to.
Sure.
So you're assuring the shareholders there's nothing to worry on that front, and you've communicated
Absolutely.
that. All right. Let's talk about TDI pricing then, sir. For the past quarter, I think it was around 250 rupees per kg. How have TDI prices moved? If you could give us a sense out there.
So it had actually gone up to about 265.
Okay.
Slowly, it is coming down, and there have been 15 to 20 rupees reduction. So we are hovering around 240, 245 at the moment.
Mr. Gautam, sorry,
yes.
just to kind of take that point forward and tying this with the earlier point about demand not being steady, so if you can tell us what will revenue growth look like, and as prices are coming off, as you're saying, will you need to drop prices, sir? Because I mean there is kind of slackening of demand as well. It's not firm as you said. So what will you do, and what will that lead to in terms of revenue growth for this year?
So first point, and that is regarding what kind of revenues growth do we see as far as FY23 compared to FY22 is concerned. FY22 also had times where there were not much of sales. So again, a bit of uncertainty in as far as seeing what the growth is. But if we will just sum the whole year up, we would be up 15% or so. The prices, you see, our business has three components. One is the mattress side or the bedding side. The other is the technical foam side, and there is a small amount where we supply to other B2B people for making mattresses or sofas, etc. Mattress side, it doesn't change much. Because we neither do we increase a lot when the prices go up, nor do we reduce. It's not required that the system is like that. B2B, yes, the prices are linked to raw material prices. There would be some reduction as we kind of go along, but there is a lag between what happens in the prices of the raw material and the price that we have for the customers. So I presume that there would be some couple of percentage, 5, 6, 7% kind of drops. But the overall impact, because that business is only about 20% to 25%, it will not make any difference to our projections as far as top line.
Okay, just one final question on your businesses in Spain and Australia. How do you see it shape up? I mean, things have looked good so far, but there are a lot of concerns, some challenges in the Europe region as well. An outlook over there?
So both of them are completely opposite, behaving opposite at the moment. Australia, which was a very matured, settled kind of a market, 3, 4, 5% per annum kind of growth, is on a growth trajectory of over 10%. And one of the reasons that we see is because Australia is also beginning to follow that Atmanirbharta kind of program, which is Australian-made, works for them, and imports from China and other places has kind of dropped. And we see that growth continuing for the next at least couple of years. Spain is a part of the European Union. Europe is in distress. There is an overall drop of almost about 30% as far as the market size is concerned for foam and its products. However, we, being a small part of that market, are not impacted so much. And at the same time, we have begun working on looking at alternate customers and alternate segments where we were not present because we were a very small part of it. As the year closes, I don't see Spain would be flat, Australia will be up, and Europe, of course, will be down.
Okay, we will leave it at that. Thanks a lot, Mr. Gautam, and all the best for the next year. Happy New Year to you as well. Since it's the end of the year, I thought I'll wish you. Thanks for being with us. By the way, you have a listing coming up in just minutes from now. Inox Green Energy.
Inox Green Energy Services Limited is
there
now
you have it.
officially listed
It's officially listed on the stock exchanges, down almost about 5%. We know this company, right? It's part of the Inox GFL group. So it's wind power. It's into wind power operations and maintenance servicing. It's also providing long-term O&M services for wind farm projects. But that's a muted listing over there, down almost about 4% for Inox Wind. Okay, but let's slip into, for Inox Green, I beg your pardon. But let's slip into a quick break on that note. On the other side, Mitesh Thakkar will be joining in for some technical trades, so keep it with the channel.
Welcome back. Well, the call earlier today was don't chase the opening. You should look to buy on a dip if you get a deeper one. And that appears to have played out. So if you chase the opening, you would be out of the money right now. The Nifty has corrected close to around 45 points from the high point of the day. Nothing really to worry, but let's find out what you do from here. Mitesh Thakkar is back with us. Hi, Mitesh. At around 10 a.m., what would the stop loss be if you had a long trade? And also if you could fill us in with a couple of stock picks.
Yeah. On the index, I think very clearly 18,250 was some kind of a breakout level. So maybe 10 points below that, 18,240 should be your trading stop loss. And these are spot levels. But having said that, I have a buy recommendation on HDFC AMC. Disclaimer, we have some futures position as well. So some interest is there. But that looks to be breaking out of a few weeks of consolidation now. I would recommend a buy here with a stop below 2100 for a target of around 2195, 2200 to begin with, and maybe even higher levels eventually. The other one which I like is SBI. It's a conditional buy. I would want to see the stock start getting past levels of 608, 609, and then buy with a stop below levels of 601, and then look at a target of 625.
Okay. Oh, all right. Any other stocks that catch your eye, Mitesh? I mean, something that perhaps not for the day, for a slightly positional trade?
See, I think the HDFC group has, we have seen HDFC and HDFC Bank do very well. I had just given a buy on HDFC AMC, but the HDFC Life also stock looks like reversing from a big decline and then a consolidation. The stock for the last 6-7 weeks was doing a range of about 515 to about 540, 545, and it's just on the verge of breaking out. I think that could be a very interesting bet as a positional trader. We'll look at targets of 590 here.
All right, Mitesh, thanks very much for that. So those are individual trading ideas and a broad view on the market at 10 a.m. Let's shift focus to commodities. Manisha standing by as always to tell us what is top of minds there. Manisha, good morning.
Thank you for that, Prashant. Well, the US dollar pulling back a bit clearly has been a risk on for various asset classes, and the precious metal prices after that decline that we saw in the previous week seem to be coming back yet again. So you have the global silver prices off its 2-week lows. It's back around $21 per ounce, and we are looking at fundamentals coming back into place here as well. It is about the FOMC meeting minutes, and ahead of that, there is some buying that we've seen across board in many of these commodities. When you look at the inventories itself, the COMEX silver inventories have seen a decline of 70% in the last 18 months to around 1 million tons there. When you look at the LBMA inventories, those have continued to decline as well for a 10th straight month in the month of October, trading near record lows right there on that one. When you look at the global silver deficit then, well, that seems to be widening when you look at 2022. Last year was a silver deficit of 48 million ounces. This year we're dealing with 194 million ounces. And the global silver demand in the meanwhile is expected to gain up by 16% on an year-on-year basis. And we're looking at a record 1.21 billion ounces being consumed in sense of silver in this year. Silver Institute actually has broken it down into various aspects as well. When you look at the total supply, well, that has increased on a year-on-year basis, but so has the total demand. So while we were in a deficit in the last year, we are in a bigger deficit in this year as well. So when it comes about demand from various sectors, whether it's about jewelry, investment, all of that actually has seen a jump as compared to last year. That is what the industrial and the jewelry and silverware and physical demand has done. The only category that has seen a decline in sense of silver demand has been photography. But apart from that, as you can see, 18% of a jump up is what we've seen in jewelry, nearly 40% of a jump up in silverware buying, and the physical buying in case of silver also has seen a strong jump up there. For the Indian markets as well, this time around, the imports have been very strong. Last year was something like 4,000 to 5,000 tons. This year, until now, the expectation is that Indian silver imports have been at the tune of 10,000 tons. This is an all-time high import for silver that we have seen. The only divergence is that while the physical buying in India and the global markets has been on the higher side, it is the ETF and the institutional buying that has continued to decline. That is also down by a record 110 million ounces, and that is the reason that silver prices have not been been able to perform as you would expect it to. This is the expectation for the next year, where Metal Focus says that they expect the silver prices to average around $21 per ounce.
Okay, thanks a lot for that. So that's on the metal space, but let's get back to tracking stocks. Siemens is the one on our radar, and Vahishta is here to tell us why. Vahishta.
Hi, Sonia. Well, Siemens is on our radar because they announced their Q4 FY22 results yesterday post-market. And remember, the company follows a financial year from October to September. The company has seen a healthy growth on all fronts on a year-on-year basis, but there has been a miss on estimates. The revenues were up 12% to 4,600 crores versus the poll, which was at 5,100 crores. The EBITDA margins have come in at 11.1%. CNBC-TV18 poll was at 12.2%, so there's a miss on that front. The order backlog today is at 17,100 crores. On a full year basis, the revenues have jumped 22%, while the EBITDA margins have fallen to 10.9% versus 11.3%. Now, in terms of segmental performances, the smart infra and digital industries performance came in strong on a full year basis, while there was a drag in margins for the energy and mobility segments. Now, these two segments are among the largest business verticals for Siemens, and hence there is a bit of drag on Siemens today.
All right, thanks very much, Vahishta, for that. That's Siemens for you. Look at delivery, by the way. I mean, there's another, we were talking about Paytm, Nykaa and others, but delivery is also now at the low point of the day. The high today was 340 and it's lost some 18 rupees from there, 322 now. So that is the other one, which is slipping. Now, Max Financial Services is taking it in the chin, has taken it in the chin all through this year, and the pain continues. Vivek is here to tell us what's going on. Vivek, over to you.
Well, that's right. So Max Financial Services, today trading at a 52-week low as well. In the morning we had highlighted that in yesterday's trading session, one of the lenders had actually gone ahead and sold shares. So Catalyst Trusteeship Limited sold almost 54 lakh shares yesterday at 637 rupees a share. Now, after a little bit more digging, what we do understand is that almost a significantly higher number of actually the promoter shareholding in the company has been pledged with lenders, and this particular share sale has actually raised worries about how exactly will other lenders treat their holding as far as the stock is concerned. Some of the other worries that's been plaguing the stock, of course, has been the regulatory scanner on the entire deal as well, and which is why when we're seeing Max Financial a clear underperformer and trading near its 52-week low as well.
Okay, well, thanks for that. Inox Green, by the way, the new listing is still down almost about 5% It's not had a very good showing today. At least the debut has been slightly lackluster. But talking about on the flip side, many stocks are hitting fresh 52-week highs once again from the PSU banking space. So the traction is not done just yet. Bank of Baroda, Karnataka Bank, PNB, Punjab National Bank, look at that, 3% higher now and at a fresh 52-week high for Punjab National Bank. Canara Bank as well is at a fresh 52-week high. So if you thought the rally was done, you're mistaken. Indian Bank as well is at a fresh 52-week high right now. So that is really the space to be in this morning. Apart from that, the usual favorites of the market these days, Mazgaon Dock is at a fresh high as well. You have something like an Ujjivan that's picking up pace, fresh 52-week high there. So lots to talk about. But we'll do one thing. We'll take a quick commercial break. On the other side, our special segment, Indianomics. Lata will get chatting with R. Shankar Raman of L&T, Mahesh Vyas of the Centre for Monitoring the Indian Economy, and Mridul Sagar, the former MPC member, to decode India's capex cycle. Stay tuned.